given the fact that the Nifty had hit that 24,700 mark, in fact, ending just shy of that crucial level. Talk about the broader end of the markets as well. It was all-round cheer in the market today. So the Nifty mid and small cap indices also clocked good gains, but the Nifty mid cap index was outperforming, given the fact that we saw a 9/10% kind of gains coming in on the mid cap index. Advanced decline ratio was firmly in favor of gainers. Breadth was extremely strong. So 3:2, that was the Nifty advanced decline ratio today. The India VIX volatility index has also cooled off slightly. In fact, 3% cool off on the India VIX index. It's below the crucial level of 14. Barring the FMCG pack, all the sectoral indices ended the day in the green. Of course, the gains were being led by the financial services pack. You had the Nifty Bank index that was, that rallied somewhere around 1%. In fact, it did reclaim that 51,000 mark as well in intraday trade. Aside of that, you had stocks like Shriram Finance, among the gainers. Even life insurers like HDFC Life and SBI Life, top of the charts, 3 to 5% gains coming in on these two stocks. Bajaj Finserv was the other one. IndusInd Bank as well among the gainers. Mind you, that was among the top Nifty losers yesterday. And today, of course, on the back of positive news, the stock was up somewhere around 2.5% or thereabouts. In terms of losers, you just had the FMCG pack that was underperforming today. PSU Bank Index yesterday, it was up somewhere around 1.5%. Today as well, strong gains of over 1.5% coming in. So in a matter of 2 days, you've seen a 3% kind of a rally on the Nifty PSU Index. Of course, it was weekly expiry for the Nifty Financial Services Index as well. So you had the entire financial pack active in today's session. In terms of gainers, as I mentioned, SBI Life, HDFC Life, all of these financial names. On the flip side, the losers list was slim compared to the gainers list. So ONGC, Airtel, Adani Enterprises, Cipla, ITC, Apollo Hospital, these were some of the names that were among the laggards. And if you look at the broader end of the markets, the Nifty 500 index, among the movers there, you had Angel One. That stock has been on a gaining spree. For the last 4 days, the stock has been rallying, and today as well, we saw a good 15% up move coming in on this particular stock. Webhub Global, Godfrey Phillips, that stock was up somewhere around 8 to 9% yesterday. Today as well, a good healthy gain coming in there. Even Allcargo Logistics, that stock was among the gainers. What's not doing well or what didn't do well today was the entire shipbuilding pack. So you had Mazgaon Dock, you had GRSC, you had Cochin Shipyard also. All these stocks, they have cooled off quite a bit in the last 1 month after a stupendous or stellar rip-roaring rally over the last 6 months. In some consolidation mode, we'll be checking with our technical expert as to how really one should be approaching these stocks. First Source and Prestige Estates, these were some of the other laggards in today's session. Let's bring on board then our guest for today. Joining me is Milan Vaishnav, who's the founder and technical analyst at ChartWizard. Milan, great to have you on the show. Yesterday we had a bit of a consolidation, but today we've broken above. In fact, we had a breakout above that 24,650 mark that was being viewed as a crucial level, right? So that has been taken out on the upside. 24,700, that level is almost there on the charts. I mean, we did cruise along that or above that level for a better part of the day, but we ended just shy of that level. So for the rest of the week, would you foresee 24,800? How is the setup looking like?
Hi, Nandita. Good afternoon to all the viewers here. Speaking about levels, I would look at Nifty in a slightly different way. First of all, 24,600, 700, 800, it's not the issue, but the kind of incremental highs that we are making is something that we need to look at it with a different perspective, which I will just explain in a while. What we need to keep in mind is that there is an upward rising trend line that begins from the low of 21,000. It joins all the higher bottoms and then extends itself infinitely. Now, having said that, Nifty had violated that rising trend line support, and on its way up, it is likely to act as resistance as well. Now, because of the rising nature of the trend line, Nifty is testing each incremental high because of the rising nature of the trend line, but it is still below that rising trend line, and it's finding resistance there. So if Nifty continues to consolidate in a given range, then we can see some incremental highs like 24,700, 750, 800 coming in. But by and large, I still expect that it remains broadly in a range. That is point one. Point two is that for 22nd August expiry, the 24,700 strikes holds almost equal amount of the call and put OI. So it's like a tug of war kind of a situation there. So by and large, I don't see any runaway up moves taking place in Nifty so long as we are trading below 25K mark. So long as we are below that mark, we will keep seeing markets moving incrementally higher, but at the same point in time, staying equally vulnerable to profit-taking bouts.
Okay, expect bouts of profit taking along the way, but Nifty Bank Index, has seen a renewed buying interest. The index per se has been underperforming, right? 51,000 was cleared in intraday trade. Do you see a fresh, signal of bullishness on the charts for the Nifty Bank Index?
Nifty Bank is also in a very broad around 1600 point trading range. It has violated the 50 DMA. It has taken support at the 100 DMA. So the gap between the 50 and 100 DMA is roughly around 1400, 1500 odd points. And we are seeing Nifty Bank oscillating between this point. 50 DMA is approximately around 51,200, 250 odd levels. I don't know the exact figure decimal. And the 100 DMA falls around 49,700. So we will see Nifty Bank oscillating back and forth in this broad trading range. It will give us opportunity to trade the index on either side, but a trending move will emerge only if it goes above 51,200 or ends up violating 49,700 levels.
Okay, since you're talking about banks, I want to talk about IndusInd Bank in particular. Yesterday it was among the top losers. It has been a consistent underperformer, when you compare it with peers like Axis, HDFC Bank, ICICI. If you look at, the long-term charts, you will see that this particular counter has underperformed. On a YTD basis, it has given negative returns as well. Of course, today we saw the stock doing well on the back of positive news flow. It has got RBI now to set up a mutual fund asset management business. It will be a wholly owned subsidiary, and the bank will be infusing equity capital in the subsidiary, right? So that has been a positive news. In fact, we have Nomura also coming out with a report. It has a neutral rating, target price at 1580 or thereabouts. Would you say that the trend that we have seen for this particular stock could be reversing, or would you say that this is just a kind of a dead cat bounce and it could remain under selling pressure, or it would be in sideways zone going forward?
So far as IndusInd Bank is concerned, what we are seeing today is not even a dead cat bounce. In a dead cat bounce, you do see some technical rebounds, which ultimately do not sustain going ahead. So far as IndusInd is concerned, the stock has been outrightly underperforming the broader markets over the past many months, and I expect it to continue underperforming the broader markets for some time. It's reeling under all the three key moving averages, and there are no signs of any bottom in place. So what I feel is that fresh up moves or trending moves on the upside in IndusInd Bank can be expected only if the stock is able to move past 1500 levels. From the current levels, that is 1380 to 1500, there are multiple resistances of different kinds and magnitude that the stock has to face. So nothing can be expected out of this until it is not above 1500.
Okay, 1500, a crucial level to watch out for when it comes to an IndusInd Bank. I want to talk to you about IT stocks, but before that, I want to draw your attention to life insurance stocks, right? The likes of HDFC Life and SBI Life are very close to 52-week highs. They have been seeing good traction, but it hasn't been without bouts of profit taking, right? Overall returns for the last 1 month have been pretty good. So how do you approach these life insurance stocks? Should you buy on dips?
I am approaching life insurance stocks in a much positive way, so to say. Speaking first of SDFC Life, after forming a high of around 700 rupees sometime in the last quarter of 2023, it has retested that same levels sometime in the beginning of the August. It's gone some kind of a short-term consolidation, and this pattern overall can act as a bullish continuation pattern for SDFC Life. So the stock has got a good technical setup. over the coming days. I mean, good gains can be expected from this space.
Okay, talking about the IT space, good traction. Last 7 days, the entire IT pack has been abuzz. Today, TCS hit a fresh record high, on the back of the fact that Macquarie Global Brokerage has added the stock to its marquee idea list. And, it has maintained its outperform rating, raised the target price to 5,740 vis-a-vis 4,750 rupees. Now, this is, I think, the only brokerage that has a target on the stock which is in excess of 5,000 rupees, right? So, if I ask you to compare a TCS with the charts of an Infosys, which one would you go for?
I would go for both. First of all, there are reasons behind that because CNX IT, I mean the Nifty IT index per se, it has been inside the improving quadrant of the relative rotation graph when you benchmark it against the broader markets. And we have seen that IT pack relatively outperforming the broader markets, and this phenomenon is likely to continue because of many reasons. First of all, we are slightly overextended on the overall technical setup vis-a-vis the broader, I mean, markets at large, and therefore some traditional defensive play is likely to come into force. And secondly, both TCS and Infosys are doing extremely good. If you compare the relative strength line, you might end up favoring Infosys over TCS. But overall, from a practical standpoint, both of the stocks are worth being the part of the portfolio.
Okay, both TCS and Infosys are worth being a part of your portfolio. What about the cable and wire end of the market? I mean, stocks, because we've had a couple of reports coming out. UBS, in fact, has come out with a report on KEI Industries as well as the mid-cap poster boy of the cable and wire segment, which is Polycab. KEI Industries, saw a strong up move today, but it's still some time or some distance away from its 52-week highs. So UBS has initiated a buy call with a target price of 6,150 rupees. It says that it is a consistent earnings compounder, and overall the outlook is pretty upbeat on this particular stock. Even for Polycab, for that matter, it has initiated a buy call, target price at somewhere around 8,550 rupees or thereabouts, and it is maintained that it's a cyclical growth champion. Polycab did had some hiccups on the way, but for KEI Industries, do you think it has the legs to make a dash at that 52-week high once again anytime soon?
Yes, I expect KEI to inch higher today. It has broken out from a corrective declining channel that it had formed over the past couple of weeks. Now, before I say anything on any stock, we need to know that the broader markets are now getting extremely stock specific, and there is one point, a larger issue that I'm a little bit skeptical because of this, is that on the Nifty 500 charts, we have got the market breadth negatively diverging. So that remains a concern for me overall when we speak about the market per se at large. But now coming back to the question, yes, KEI has the potential to test its prior high over the coming days.
Okay, that's the view on the cable and wire stocks, but shipbuilding stocks saw some bit of a badgering today, or most of the Nifty 500 losers that I saw had names like GRSE, you had stocks like Mazgaon Dock, 8 to 6% kind of losses coming in there. In fact, if you look at the 1 month chart of some of these stocks like Mazgaon, GRSE, 20 to 30% kind of cut, but that has come only after a rip-roaring rally of say 150% or thereabouts in the first 6 months, right? So, is this cool off that we are seeing in these stocks a good buying opportunity, or do you think it is going to be in some kind of sell-off mode going forward?
Yes, see, if you talk about Mazgaon Docks or Garden Ridge Shipyard, or for that matter any coaching shipyard, they all have shown a similar behavior, and all of them are pulling off from their high point, and they have given up a respectable chunk of their overall gains. But now, that being said, merely that the stock has declined is not a reason enough to buy. We should wait until there are some signs of a potential base being put in place again, and before the stock may it should show some signs of cooling off of the selling pressure. Only after that we can start looking at it again, not now.
Okay, wait and watch. That's the kind of strategy you should adopt when it comes to these shipbuilding companies. But Trent, that one stock I want to talk to you about, because it's seen a 30% rally in the last 1 month. I think in a matter of 6 to 7 sessions itself, it has seen a 20% rally, right? Is this the best retail stock chartically if you compare it with the likes of a DMart? What are you envisaging?
I'm sorry, I missed what stock are we referring to?
Trent, retail stock, Trent. Milan, you got the stock?
Are we talking about?
We're talking about Trent, the Tata Group stock, retail stock. No worries, I think we'll come back to that. But let's talk about a Sequence Scientific. That stock hit a fresh 52-week high today. In fact, in the last 3 months itself, it has seen a very good up move of 40% or thereabouts. Of course, the company has got a WHO pre-qualification nod for, an infection drug, the API for that. It has got a WHO pre-qualification for that. But, given the fact that the stock has seen such a strong up move over the last 3 months and also hit a fresh 52-week high, could there be signs of fatigue visible on the charts now? Or do you think it's a one-way street for now?
Are we talking about Sequence Scientific?
That's correct.
Yes. Sequent Scientific has staged a breakout, but it has closed after coming off significantly from its high point. So one can fairly stay invested so long as the stock keeps its head above 150 levels. So one can treat 150 levels as a stop loss for a fresh entry, or for anyone who is already invested in the stock can trail their stop loss higher to around 150 levels.
Okay, last stock really, Allcargo Logistics. It saw its highest ever monthly volume in the month of July. The stock was upbeat today, but in the last 3 months, the stock has given negative returns. After today's up move, do you think there has been a decisive trend reversal for this particular stock, Allcargo Logistics?
Trend reversal, yes, it is attempting a trend reversal, but confirmation, no. There is no confirmation as yet. A trend reversal would get confirmed if the stock is able to move past 7150. Above that, it will confirm a reversal of the trend.
Okay, that's the view on this particular stock. But before I let you go, Milan, any recommendations for viewers, either short term or, with a 1 to 2 week time horizon, anything that you would be recommending?
Yes, I would be looking at Tata Steel and Tata Power.
Okay, any targets, stop losses to work with here?
Yes, Tata Steel, we can expect around 160 to 164. I'm sorry, 1 minute. I'm mixing up two prices as always. Beginning first with Tata Power, I'm expecting some rebound there, and while keeping a stop loss of 405 on it, we can expect it to test around 430, 435 levels there on Tata Power. And on Tata Steel, I expect once again a technical rebound. We can use 150, which is the 200 DMA, as a stop loss, and expect the stock to rally up to 164 to 165 levels.
Okay, Tata Power and Tata Steel, two recommendations coming in from Milan. With that, Milan, would like to thank you for taking our time this afternoon and joining us on Closing Bell. Look forward to interacting with you sometime again. Thanks a lot for taking our time and joining in.
My pleasure. Thank you very much.
Thank you. Well, with that, of course, we've come to the end of this edition of Closing Bell. It was a good day of trade. We ended just shy of that 24,700 mark, but all of the sectors were participating. It was a broad-based up move. You saw some of the IT stocks like TCS hitting fresh record highs, and of course financial stocks were the flavor of the day. But with that, completely timed out. Thanks a lot for tuning in. But of course, you guys come back and join us tomorrow morning at 9 a.m. on opening bell with all the cues for trade and all your queries as usual. From me and the entire team, thank you. Have a great evening and see you again. कितना डिले है आज यार फीड में बहुत